Tyler, I've noticed that Occidental Petroleum is getting a little bit of buzz right now. And my guess is because Uncle Warren talked about Vicky Hollub and the company in his latest shareholder letter that just came out a couple of weeks ago. And Oxy's a good company. I think it's sure Buffett and Berkshire did its part to help keep it a going interest back during the pandemic, but well run. They've certainly capitalized on everything that's happened over the past few years. But you and I have some alternatives to Oxy that we think might be better buys right now if you're looking to play in the oil patch.
Yeah, I think we talked about this a couple times. Occidental's fine. It's an exploration production company, but we've always just wondered, like, why this one over so many others and why Buffett has continued to own it. And so, in that spirit, let's go look for something else that may be a little more interesting.
Yeah, and I think part of the reason is just the size of the companies. Other videos we've done talking about Warren Buffett stocks. Sometimes it's just has to buy the ones that are big enough to move the needle on the Berkshire balance sheet. We'll get into that a little bit, but we have some that we think are not just smaller, but also just better. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you should go to our link. You see it on the screen. The Motley Fool is going to give you its 10 best stocks to buy right now. Follow that link. Come back here when you're done, or wait till the end of the video. Either way is going to be fine, but definitely check it out. Okay, Tyler, let's start with Occidental Petroleum just real quickly. What is Oxy?
For all intents and purposes, Occidental Petroleum is an exploration and production company. They explore, develop, and produce assets of oil and gas around the world, with a large focus of that being in the Permian Basin in West Texas. It had been in the Permian for a very long time. Before shale, they were doing a lot of what's called enhanced oil recovery in the region, because a lot of people thought that the Permian Basin was played out for a long time and everyone was trying to milk the last drop out of what was available from this reservoir that we found 70, 80, 90 years ago. But with the advent of shale, companies like Occidental Petroleum just happen to be sitting on tons and tons of land in this very prolific shale patch. And it gave them the opportunity to develop shale in the Permian. As that has grown, it's become more or less the prominent part of its business. It has some chemical manufacturing, it has some production in the Middle East. I believe Oman is where it has most of its Middle East production right now. But again, for all intents and purposes, this has become a shale company with an added twist lately in that it is exploring direct air capture of CO2 and doing sequestration of CO2. It's a new technology that they've been exploring as the way for oil and gas to remain relevant as we transition to a carbon neutral or lower carbon environment.
That business is in such its infancy right now. We don't know at all what it's going to look like in 5 or 10 years. And the other thing too is like thinking about the Buffett relationship here. There's almost a bit of an arranged marriage aspect of this. If you go back to before the pandemic, Oxy made a huge move to acquire Anadarko Petroleum, which was one of its largest peers. There's an argument to be made that it paid too much. Certainly back then, I think everybody in the industry thought that it was an overreach. And it was such an overreach that it needed additional financing to do it. And in typical Warren Buffett fashion, he got a sweetheart deal with, I believe it's warrants that earn a very high yield. And then they're starting to convert, and Oxy is starting to buy them as well,
Yep.
in addition to the equity stake that they have. And so a little bit of this is the horse that Buffett has hitched its wagon to. And because of the relationship with those warrants, there's certainly no reason for them to be making any major changes with that relationship now. Let's move on from there and let's talk about the stock that you're going to bring to the table. It's certainly the most under the radar one. It's so under the radar that a lot of people, the name might sound familiar if you're an oil stained wretch, but for those of us anybody that's not too deep in the oil and gas industry, you're not going to know anything about this one. Take it away, Tyler.
I wanted to go in a direction where it's basically Warren Buffett bought Oxy in part because it was a big company. And Berkshire Hathaway has to buy big companies, right? They're constrained as to what moves the needle for them. As I've been watching the oil and gas industry, there is a lot of very small companies that look incredibly undervalued. And one company that I stumbled upon that to me was so compelling. I actually bought shares recently. It's Unit Corporation. It trades on the pink sheets and has a ticker is UNTC. This is both an exploration and production company, as well as owning 15, I believe, 14 or 15 drilling rigs that it contracts out to other exploration production companies. So it has both a component of exploration production as well as an oil and gas equipment and services. Two very odd fits. You don't normally see a company have these two things together. And that's part of the reason why I think it's a little undervalued. Because if you look at the contracts for its drilling rigs, they're basically contracted out for the entire year, all of it. So nice revenue stream that's going to be coming in just from contracts on that. It's oil and gas production, nothing fantastic, but for a company that's this small and this undervalued, it's hard to ignore. It's a $383 million company that has $200 million in cash on the books. Closer to half of the business is just cash sitting on the balance sheet, on top of whatever it actually produces. And in the past year, it had, based on its trailing 12-month earnings, it trades for 1.5 times earnings, or 3.5 times free cash flow for the year. So generates a lot of cash, has a lot of cash, and is, in my opinion, obscenely undervalued. And so when you have those kind of combinations together, it looks to me like something that, I don't know if it's ever going to be trading for a higher multiple. I don't know. I don't care. At that low of a multiple and the amount that it's paying out in dividends, I feel like that's a good bet. In 2023, it paid out 25% of its market cap in dividends. And if I'm going to get a 25% dividend, I don't even care what the stock price does.
And I think there's a couple of things about it that are really what you mentioned that are notable, Tyler. And number one is if you're investing in an independent oil and gas company, largely, particularly in the short term, especially, it's going to be very much a leveraged bet on what oil and gas prices do. So we've seen that with the industry broadly over the past year and a half when oil prices moved from the 100, 120 range to 70s, 80s range more recently. Profits have come down and the prices of the oil and gas producers have come down substantially as well. So you're betting that you think oil and gas prices are going to go back up. And one of the things that you can do to help inoculate yourself from that risk is have a really good margin of safety, right? And the margin of safety and valuation and balance sheet with unit is really attractive. So I think that's really notable there. And the fact that it is so under the radar because it's a few $100 million market cap now, trades on the pink sheets. So caution, anybody out there that does any research and reaches the conclusion that you're interested in investing this, use limit orders.
Yeah,
be thoughtful
it's a
about
very
how you buy
illiquid
shares.
microcap.
Yeah, exactly. So just be thoughtful about that if you decide that you want to take a closer look at this one. Let's go a little bit bigger. I'm going to talk about Devon Energy. That's my alternative to Oxy that I think is interesting. As a starting point, it's still pretty big. It's about a $25, $28 billion market cap company. That's about half the size of Oxy. That's one of the things that is appealing is that it's not quite as big. The other thing too is that it trades for, getting back to what Tyler was talking about with unit, you've got a better multiple. I'm going to share that right here on the screen. You can see it trades for, give or take, about 8 times earnings. Whether you're looking at last year's earnings, you're looking at estimates for 2024 earnings. Compare that to Oxy, which trades for in high to mid-teens earnings. And part of that is the Buffett bump, right? The premium that comes along with it. We also saw Devon reported recently their volumes are going to be up for the full year. They're going to down in the first half of the year, especially in the first quarter because of some winter weather issues that I think affected basically everybody in the Permian. But by the end of the year, they're saying their volumes are going to have grown. And they've got incredibly low cash costs, enough so that they were saying that even with a relatively flat volume first quarter and then ramping up in the second and third quarters of the year, they were able to raise their base dividend, I think 20%. So you're getting a little bit better payout. And of course, the big chunk of the dividend that's that variable based on excess cash flows, that's still going to remain variable, but the base portion of the dividend increased. And again, thinking about that multiple high single digits earnings ratio that you're getting, there's a good value there to be had that I think does create some additional margin of safety. And if you're a little bit more concerned about liquidity, you're not interested in a micro cap stock like Tyler talked about that can be harder to buy and you have to be really mindful about using limit orders to make sure that you protect your investing dollars when you buy or sell, then I think Devon Energy is one that's worth looking at right now.